Fantastic. Thank you, everyone. Thank you very much for joining me in today's webinar. My name is Josefa Hamid, and I'm a senior analyst with Daily Forex. So today's webinar is entitled How to Harness the Power of Market Reversals. So before we get into the meat of the actual content, a standard risk disclaimer. This is something you've probably read 100 times if you've attended these kinds of webinars, but it's saying that really today's webinar is for educational purposes only. It's not necessarily we're not giving trade advice, we're not giving trading signals and so on. And keep in mind, of course, that Forex is a product where it's a leveraged instrument, and it can result in losses as in any kind of financial markets trading. Okay, so a little bit about me before we begin the webinar. So again, my name is Josefa Hamid. I'm one of the senior analysts with Daily Forex. Primarily, I'm a Forex trader, and the majority of my trades are around the majors. So about 7 or 8 majors, the usual suspects: EURUSD, pound dollar, USD CAD, Aussie dollar, New Zealand dollar, and so on. I'd say about 80% of my trades are there. Occasionally, I look at the odd cross. So I might look at, for example, Euro Yen, New Zealand dollar Yen, Aussie dollar CAD. There's a couple of crosses I look at. And then I look at a couple of futures contracts. The most common being for me is the S&P 500, but I've traded a few crude oil futures and some natural gas futures, but mainly I'm a Forex trader. The most important thing I can tell you about me is that I'm a technical analyst, rather. I got my analysis mixed up there. I'm a technical analyst, and that's predominantly what I use for my trading decisions. Now that means different things to different people. But for me, what it means is I use the price chart. I don't use fundamental data. So for example, I'm not looking at interest rates announcements, or GDP, employment numbers, and so on. I mark them in terms of when they're being announced on the economic calendar, but I won't use those numbers to influence how I trade. I really just look at the price chart. And I'm based in Toronto, Canada. I moved here 10 years ago from England. I'm really curious about where my audience are from. I know Daily Forex does attract quite a global audience. So if you have a second, just type in the chat box where you're from, either the city or the country. I'll give that 30, 45 seconds. Maria from Spain, nice to meet you. Denver, Colorado. Paul, whereabouts in the UK are you from? Cornwall, UK, South Africa. We've had a bunch of South Africans actually from the previous webinars. Nathan from Melbourne, Australia. Nathan, I believe you've been on some of my webinars before. I remember yourself. Eugene from Nigeria. Nice to meet you, Eugene. Paul from London. I'm from a place, I don't know if, how well you know, you're from Hayes. I'm from a place called Croydon, so that's Hayes in the west side. Croydon is in the south. Hayes is actually a much nicer area than Croydon. I'm sure you probably agree with me there. You know Croydon? Okay, great. Devon from South Africa. Nice to meet you, Devon. From Zambia, from Ghana. Emil from Sydney. Emil, I'm dying to go to Sydney. When things open up, I've got 2 cousins living out in Sydney. I've heard it's beautiful there. So that's actually on my top 1-2 places to go to. Thank you for all of that. Thank you for humoring me there. It's nice to know who I'm talking to. Obviously, everything's over Zoom now, so I just don't get to stand in a room that I did a couple of years ago and deliver this type of content. Okay, so let's crack on. So the anatomy of reversals. I really want to break down reversals for you. It's really important to know when the market is reversing. You know, when a trend develops, often it's easy to spot a trend, and it's easy to get into. The market is going your way, the tide is going your way, but at some point, most trends will reverse. And it's a good idea to know when those reversals happen, in A, to get into a new trend, and B, not to get caught out following the old trend. So let's talk a little bit about how the market moves. So let's say the market is moving up like this. And from point A to point B, it's in a bullish trend. and then the market decides it's going to reverse and it's going to go down. So within that gap, there's going to have to be a reversal. The price will have to pause, stop, and then turn around and then reverse. So in that circle is where we have the reversal pattern. In this case, it's a bearish reversal because the market went from bullish to being bearish. So really what I'm interested in is, okay, what are the telltale signs on a chart pattern in that red circle to tell us it's a reversal pattern? What kind of things should we be looking out for, and how do we trade that? So on the other side, when you're a technical analyst, everything is symmetrical. You look at bullish and bearish markets in exactly the same way. So if the market is going down, it's bearish, and it decides to turn around, it's going bullish. Now you have a bullish reversal. So everything I'm going to talk about today is really symmetrical. You can turn it around from bullish to bearish, the same concepts. And I'm going to show you examples of both. I'm going to show you some bullish reversals and bearish reversals. So the first type of reversal pattern, it's a very simple one. It's called a double top. It's where the price makes a resistance right here, it retraces, and then it stops again at the same resistance level or nearby, and then falls back down. So that's called a basic double top. Pretty easy to spot. Essentially, you want to be finding when price moves to that resistance point and then eventually breaks that support in between. You know, the likelihood is that it's going to reverse. It's not guaranteed. Obviously, we're trading, we're managing probabilities, but that's a double top. The next is a triple top. Statistically, these are stronger. So if you're trading a double top to triple top, you know, when you see essentially the price at the same level 3 times, it's try to break through 2 more times after the first time it touches that level. And usually the supports in between, often they line up. When that support is broken up, it becomes a fully fledged triple top pattern. I read, or many years ago, I learned that certainly in the equity market, US equity markets, when somebody had collected statistics on triple tops in particular, they had an accuracy of something like 91%. When the support was broken, 91% of the time, that trend continued. Of course, it's very variable. It depends on how you measure it, what time frames. And this was a study that was done in the US equities. But certainly in terms of what I've seen in Forex and the futures contracts, I'd agree with them more often than not. Triple tops really do work out. And the last one is really it's a variation on the triple top. And it's really the most common one. It's the one that, well, certainly the one that everyone is taught at some point, and that's the head and shoulders. You have 3 peaks, but in between, the middle peak is always more prominent than the 2 side peaks. And that's where you get the term the head, and then you get the 2 shoulders either side of it. You still get a support line between. On a head and shoulders, that's often referred to as the neckline. It's the same kind of concept. You want the neckline to break, and we're going to see this with some real charts. You want the neckline to break, and then you expect price to go down. So it's made a run for it, and the next time, you know, in the middle of the head, the price retraces back, and when it tries to come back, the bears step in a lot quicker. Rather than waiting for the price to return up here as it would in a triple top, it's the bears step in a lot quicker to break that. So that's why, because of the speed of the fall after the head relative to a triple top, that's often why head and shoulders are considered quite stable patterns, quite predictive in nature. And then you can just reverse all these patterns for the bearish side. So I started off with bearish reversals. Now these are bullish reversals. You know, the price is going down and then it eventually reverses up. It's the same thing. It's just a mirror image. Double bottom, triple bottom, and head and shoulders bottom. Some people call them inverted head and shoulders, inverted double bottom, but I just call them double bottom, triple bottom, and head and shoulders. Okay, so let's have a look at an example. This is the pound dollar on the 4-hour chart. And you can see from left to right, the price has been trending down. So you're trending down quite cleanly, and it really falls down here, and then it immediately halts. It stops. My assumption at that point, as I would be trading it, was this trend would continue. That would be my assumption. There's made a lot, unless there's a support. This support lines up with something previously on the chart. Now, so my assumption would be that the trend would continue. And by the way, if you have questions as I'm going along, feel free just to jump in and ask those questions. I'll be happy to answer. I've kept the chat window up so I can see people typing. As it moves down, certainly makes it really collapses at this point. Maybe there's been a news announcement or something, stops, and then immediately makes a bullish run here. Now, one of the things I want to say about this little run here is immediately the bears kind of step in. So what you're going to have here is at this point, it's just a regular pullback. I'm still expecting the trend to continue to move down, even at this, in the middle of this, this formation. So I don't know if it's going to be, I don't know if it's reversing yet. Here, I'm just thinking, okay, the trend is going to continue. And then the bears step in. But again, it stops at this point. And then eventually the price moves back up. So really it's around here, this area here, where I notice there's your double bottom. So it's really around this area in the middle that I realize, okay, now it's starting to reverse up. So when it breaks out here, and then if you can see my mouse, hopefully, in this formation here where it starts to move sideways, it's clear this region, there's a new trend that is forming. It goes sideways for a bit and then eventually it continues up. So there's your double bottom. Pay attention to the middle area of the double bottom when it's formed. Does that get broken cleanly? So it stalls a bit, comes back up to it, stalls a bit. Even here, I might be thinking, okay, this is going to continue going down. You know, it really does stall a bit, but eventually it breaks through and now you've got a fully fledged double bottom. So there's your two bottoms. Some people might see that as a triple bottom. Don't get too caught up occasionally if you think it's a double bottom, is a triple bottom. What's important is that the prices start to bottom out and you've got a very pronounced resistance in the middle there. You've got a couple here, you've got one here, but the very pronounced one here. When that breaks, watch for the price to take off, and there is, I marked it there. So really it's at this point here, you should see prices really kind of rocket up. Okay, so that's a GBP USD 4-hour chart, basic reversal. I think for me, that's more a double bottom, but I know I've shown this chart to people. They said they feel this is a triple bottom, so I've marked it on the chart. Okay, another example, Euro USD, a bit more longer term. This is a weekly chart. I'm very agnostic to timeframes. The examples work. They're more stable on the higher timeframes, but of course they take longer to play out. Otherwise, you can apply the same logic regardless of timeframes. I trade all the way down to the 5-minute. So there's the price is trending up, moves down. So what happens in between? There's your bearish reversal. There, for me, that's definitely a double top. And bingo, there it goes. There's a bottom. So when it breaks this support area here in the middle, hopefully everyone can see where I'm getting these lines from. That's the key thing. Where am I getting these lines from? You can see the support area in the middle collapses through and down the price goes. Really, really pushes down hard. Okay, so this is an interesting chart. So the price was coming down here and then it moved back up here. So I wonder if anyone can see what I'm seeing on this chart when it was forming, and that was a head and shoulders reversal. So for me, there's the head in the middle, there's the two peaks, and it had a sloping neckline, not necessarily flat. When it broke through, eventually went sideways a little bit, but eventually started to trend up. So sometimes with a head and shoulders, the neckline, because you're joining up now to, in this case, it's an inverted head and shoulders, so two resistance areas. Sometimes it's not flat, sometimes it's sloping. But once you can see it, you mark it out on the chart, and you often notice if you've marked it properly, when it breaks through, it's quite substantive. So it really took one nice big candle to break through, and then another second big candle. It really broke through this minor resistance here. There you go, a little bit of sideways movement, but really, if you'd gotten into this trade, you wouldn't be taking much heat. You'd just be waiting it out. This is the weekly chart again on the Euro USD. So you'd be waiting it out for a few weeks, but you'd have a target somewhere up there and a stop below there. So this would be a very long-term trade. Your stops, you want to keep it below the reversal. You could, if you want, keep it below the neckline, get a tighter stop, We could give it a bit more room and keep it below the head and shoulders, but then there it goes. Okay. Now let's look at, we looked at patterns which were pure reversals. Now I want to introduce you to the bilateral pattern. This is both a reversal and a continuation of the trend. So you can break out in either direction. So sometimes it really does, it's not a pure reversal pattern, but it can be depending on the scenario. I'm going to show you both so you can start to tell the difference. So you can break out in either direction. The key thing with the bilateral pattern is the price compresses and forms a peak or a triangle. So this is what it looks like. So you have a symmetrical triangle, an ascending triangle, and a descending triangle. Now, with these types of patterns, the common logic has been that ascending triangles are bullish and descending triangles are bearish. I don't always buy that. It really depends on how it breaks out. I've seen ascending triangles break on the downside. I've seen descending triangles eventually break on the upside. You'd think it should be bearish because you're seeing lower highs. I get that, but until it breaks out, that's when I really know which way it's going to go. So here you've got a trend that's developed from point A to point B. So, and what I noticed on this, when this was developing, this is the euro dollar daily chart. I'm always looking at the long-term charts on the euro dollar, especially. We've always got to trade in there somewhere, but there's, for me, there's the, excuse me, the triangle. It's, you can see the price compresses. It's reversed. It was a reverse is kind of a bit of a downtrend, but it's been trending down for a little while. It reverses that and then breaks out into a solid uptrend. So this is an interesting chart. This is this is the dollar yen, and again on the weekly. And I'm going to show you a bunch of formations on this trend. So initially this trend moves up and then moves down and moves back up. So this is where you can start marking out your charts. So initially, you know, there's a descending triangle, breaks to the upside, even though it's a descending triangle, breaks to the upside, starts a new trend, makes a symmetrical triangle, breaks to the upside. So now this triangle isn't a reversal, it's a continuation. Another smaller triangle, breaks to the downside. So it breaks to the upside. I'm being asked a question from David. David, downtrend channel in an uptrend, I think is bullish. Yes, you're right. It can be. Yeah, it can be. And I think you might, David, you might be referring to a wedge. I'm not sure, but yeah, it can be bullish. I wait for the breakout because sometimes this will break down to the downside, or this could break down to the downside, etc. And then you've got a head and shoulders that form. There's your neckline, nice and flat. You've got some easy touches there. It's a really clean neckline, breaks through. And then you have a symmetrical triangle here. So if you notice, the symmetrical triangle here continues the uptrend, but the symmetrical triangle here reverses that previous trend and then goes back into the head and shoulders territory. So there you go. Okay. So this is an example of, excuse me, I'm just going to adjust my seat for a second. This is an example of the Euro USD on the 4-hour chart. So I'm going to break down this reversal area. So the price from left to right has been trending up, peaks around March time, early March, and then this is going back to 2018, and then trends back down. So here is your reversal area. So let's break it down. Let's zoom into this reversal area and see what we can see. So this doesn't fall into the usual double top, triple top, head and shoulders, but clearly it's making a bunch of several peaks. The price has been trending up, and the longer it goes on for about 5, 6 months maybe. It's obviously stalled that trend. So the question is, does it break out on the bullish side or does it go back down? The longer that kind of range goes on for, that counter pattern, the more chance that it will end the previous trend rather than break to the upside. So this is it on this is the 4-hour chart. Now I'm just going to zoom in and show you a bunch of things about how I mark this chart up for. This is a trade I actually took. So let's remove the box and now look at the first line I drew. So this is the support line I drew. There's a second line you could have drawn. You could have drawn a line there. So this line here also matches up. If you extend it back, would match up to this area here. So both lines are valid. I took this as my key line because you had a bunch of touches there. Yeah, you could match this. You could do the bottom line as well, and they're both valid. But the key thing is it broke through that area, broke through the main line that I drew. If you could have drawn the dashed line as a main line, it broke through that area, and you notice it breaks through and it kind of tests each line, and it kind of confirms that it doesn't want to be back up there. That support turns into a resistance. So that when you have that role reversal, it also confirms the direction. The support is now broken, turns into resistance here. If you'd drawn this as your main line, the dashed line, I'm giving you what I'm showing you is actually how I drew it at the time of the actual trade. So when it broke the main line for me, for some of you, I could completely appreciate that you might have done the dashed line here as your main line. It broke that, came back up, tried to touch it and continued to fall. So either way, it's confirmed that this formation here, you can argue it's a bit of a triple top here. There's 1, 2, 3 big tops, but there's a bunch of tops, and then it eventually breaks that support. The other thing, I'm going to take these lines off for a second. The other thing you might have seen, depending on how you eyeball the chart, is that it really did form a wedge towards the end. And when you line up certainly the bottom of the wedge neatly, really breaks through that wedge and tests it again from the other side before falling. So I at the time of the trade saw this is what I saw when I actually timed the trade to enter it. You might have seen on another day, or you might have seen the dash line. And afterwards, when I looked at the chart, I also saw the wedge as well. So there are a number of signs that show, so there's a breakout there. There's a number of signs to show if that the price is falling. So keep in mind the fact that higher time frame, and this is true for any technical analysis principle, higher time frames will dominate lower time frames. If you've got a reversal on a lower time frame, let's say the price is turning from bearish to bullish, but the higher, from bearish to bullish, let's say there's a reversal, but the overall trend is still bearish, the higher time frame trend will dominate the lower time frame trend, or the higher time frame pattern will always dominate the lower time frame pattern. So remember, look at your reversal patterns in the context of what's going on in the higher time frame as well. My typical time frames for what I consider the higher ones, 4-hour daily and above, that's really, and then anything below that, the hour, 15-minute, 5-minute, I consider those are lower time frames. So my style of trading. So I do my analysis on the higher time frames. I do my execution on the lower time frames. If you want some analysis in the market, one of the places I go to, both for my economic calendar as well as just some general market analysis, is xness.com, exness.com. Actually, I'll put it in the chat window. So I get my economic calendar from there, and there's some basic market analysis that you can also use to just kind of follow your charts. Final thoughts. If the chart isn't clear, stay away. Don't get too caught up if you can't see a trend or you can't see a reversal pattern. If it's not clear to you, it's actually fine. Most of the time, it's not going to be clear to you. The charts, remember, the markets aren't there to serve us. They're there to just provide trade and provide institutions to transact currencies. We happen to speculate on those movements. So if the market isn't clear, certainly stay away. And always mind your risk. So remember, I'm showing you charts. I'm showing you examples that have worked. Mind your risk. Keep a stop loss. Not everything's going to work. It'd be good if you're getting it more than 2/3 of the time. Then you're a really good trader. Honestly, mind your risk. Make sure that your reward is at least equal to your risk, but it should be greater. 2 to 1, 3 to 1. then you're going to start making real money from trading and really start considering it as a source of income. If anyone wants to reach out to me for any reason, just give me a shout, josefa@dailyforex.com. If you've got questions, or you just want to say hello, I'd be happy to. I trade full time, and it's always great to meet other traders. So thank you very much. It's 2:29 Eastern time here, so I'm going to send you a quick link as well for FX Academy and Excellence, just to so you can just see some of the resources that we use internally. Otherwise, have a fantastic 2:20. Yep, it's just time. Have a fantastic day.